I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Futures are higher this morning as the Nikkei and European markets rise. JP Morgan raises its GDP forecast after yesterday's strong retail sales. And we'll see how Scott Redler's predictions for 2013 held up in the first quarter. I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are pointing to a higher open this morning, and as we're approaching the end of the first quarter, we thought we'd take a look at Scott Redler's predictions for 2013, where we're at now, and where we could be headed. So let's start with the S&P. Scott, you had said if we could get past 1474, could be a road to 1540 to 1576 in the first half. So being as we're already here, what do we do now?
Well, at this point, I think you need to trim and trail. I think people have heard that term. And, you know, when I come up with my 2013 predictions, or every single year, I try and take a tactical approach. I look at levels in the market, I look at areas, and I say, okay, if this happens, then that could happen. So I try to create a roadmap so then when it happens, we can navigate it. So first things first, in our tactical approach in the 2013 thesis listed in December, I said if we can get above 1474, there's no reason why we shouldn't be able to see 1540 to 1570 by the first half of 2013. And if you look at the chart of the S&P, you could see that the reason I talked about 1474 is not because I just come up with a number. That was last year's high, September 14th. So once you take out a high, usually you go higher because people are short versus it, or people are looking to get above it for continuation. So we started the year with a nice igniting move. So almost like a bull flag, so to speak. So here is your pole, here's your flag right into that area. So that made it even more juicy, you know, at that time for traders to gravitate towards it. So from there, went as high as about 1530, pulled back, you know, held the 50-day, nice reversal here, and then another pivot we took out was 1530, and here we are, you know, hovering around 1556. So with that said, people are trying to figure out, you know, do they take stocks off the table? Do they get short? What do they do? We have a long year ahead of us. I think at this point, just stay with the rally, maybe a little less risk, keep your hedges. And even like the last 3 days, we've had 2-3 down openings where I've talked about the spiders. I said if we could hold the upper floor of 155.20-ish, you know, chances are we can continue to the potential highs of, you know, of the decade. And if you go back to the chart of the S&P, you'll see, you go to this monthly chart, and the decade high is 1576, which is right around here. So we are very, very close to that. And here is this floor. So question is, can we punch right through it, or do we, you know, correct a little bit there? Nobody knows until we get there. So at this point, I would just say continue to watch the leaders, continue to watch the market. And at this particular point, you know, so far so good.
Right, definitely, so far so good. And I know you like to look at the S&P, but the Dow is the guy in all the headlines, rose to its 9th consecutive up day yesterday. So why didn't you focus as much on the Dow in your predictions?
Well, the media talks about the Dow, but I feel like the traders talk about the S&P 500. I just feel it's such a bigger barometer of what's going on in the market. So I measure the health much more with the S&P 500 versus the 30 stocks in the Dow, but overall, very healthy. You look at the chart and what people are talking about, you know, this was the low put back, you know, well, you know, you remember that historic low, that outside day, and from there you had a higher low, higher low, higher low. Say that a few more times, and boom, this is what everyone's getting excited about as we took out the high here of 14,198, and here we are a few hundred points higher. But, you know, we are a little bit extended. You go to the daily chart and you will see, you know, to be excited to start the year, this is kind of like when we took out 1474, same analogy right here. Then we went sideways and went again. So overall, still a lot to like, and there's not that many cautious signs except for maybe light volume, and other people will say it, but we've had that for so long, just to stay with the rally and just, approach it and keep maneuvering it.
Right. Well, we're going to go over a bunch of your predictions and where we're at now and where opportunity lies going forward, but we should mention that everyone has access to these predictions and has had access since you made them in late December. This isn't something you just issued after, we started getting hints of where we were going.
I actually put them out yesterday so I could talk about them, so tomorrow's newspaper today.
Right.
Which is not the case. Every year we do it, we just try and give you a roadmap of stocks that we like, chart patterns that we like, sectors that make sense common sense wise, and we put a plan together. So if you just say you don't trade actively every single day and you're like, okay, I just want to put a blanket out there of whatever T3 says on their predictions, which I don't recommend doing, I recommend you looking at it. We put them out in December before the year starts, so this way you have enough time to look at it, see why, get some conviction with it, and then start initiating trades, maybe then and then add to them as they start working. So again, I think it's been on the site since either the last day of December or somewhere around there.
Right. Well, so let's get into some of those predictions. In late December, Scott predicted that the Japan Nikkei 225 index could have a similar performance in 2013 that it did to 2012 when it was up 23%, and so far year to date it's up over 17%. So.
Yes, I think after last night maybe 19%. But it wasn't because I'm this big economist and I was out there surveying the Japanese lifestyle and what they could possibly happen. I looked at the chart and then I said, okay, the Nikkei was one of the first indices and first countries to take off and lead the technology revolution, but then they got mature, went through their cycle, and they had a really long base. So I said, you know what, last year I focused on them first and it didn't really have much traction because of what happened with the tsunami. And after the tsunami and which was a horrendous situation, I feel my heart goes out to people's families that were affected. You had a lot of rebuilding, you had a lot of economic activity, and then obviously this year everyone's talking about the yen devaluation. But overall, the reason I liked it was because of this chart. You look at the chart here of the EWJ, which is the way a lot of people play Japan, and you will see you had this channel here. Okay, a channel that had defined support, defined resistance, and you had a basic downtrend all the way from the highs here 2011. So I said above 950, it can get going. And not only did it get going, it's it's continued to go, and it took out this prior high, started a new trend, so it looks good. I think overall it can continue. If you want to take a little of exposure down in Japan, that's fine. But the next resistance in the EWJ doesn't come in until about 1081, so there's still some room here. But I didn't think it would get here this fast. So at this point, take off a little bit. But then, if we see a move back down to test this area, maybe you buy some back. If not, continue to ride it out. I still think there's more room. But I think 3/4 of what I thought would happen this year is already done within the first less than a quarter.
Right. Who knew anything was going to get here this fast?
But you never know. If you're in the right trade, you just let it go. You try and trail it and stay with it. And staying with the winning trade is sometimes the hardest thing to do, which I still continue to work on.
Right. Well, it's a struggle for anyone. But we should also mention you like Toyota for its strong prospects in 2013, as well as its large exposure to Japan. You said you thought it could get back to the 110, 120 area this year. The stock closed just shy of 103 yesterday, so we're already close.
Nice. And if you initiated it at the right breakout price, again, you don't have to know when it's going to go, how it's going to go, but if you have the right price, it's easier to stay with. And if you look here on Toyota, one of the reasons why I chose it was because, again, look at this channel here. This was all the way back from 2008 going sideways. Then you had your intermediate channel right here, where this was your resistance to break above. This was about 84, and then here was a more macro term, and this was 94. So I think 94 was the level that I spoke about. So above 94, you had a pretty big void to at least 110. That's a nice move, and if Japan was going to go, you figure some stocks in their economy were going to play along with it. So I chose this to be the vehicle with Japan, and so far so good here also. This would have been a spot to get into a core position, and now you kind of trim and trail it. You look at the daily chart here of Japan, or not Japan, I'm sorry, of Toyota, and you'll see that after this move from 94, it's still basing well. The longer it stays within this channel, I think that the higher the probability that at some point it takes out 106 and then continues to the upper targets later this year. But again, base on base type of patterns, you just do less with. you do your core trade and then you try and stay with it, and then every now and then, if it triggers through one of these flag or base type patterns, you add to it and then you create cash flow, book it, and then stay with your original trade.
All right, well, Boeing may have faced a lot of hurdles so far this year with the grounding of its Dreamliner 787 fleet, but it already reached your target of mid-high 80 level as it closed at 84.75 yesterday. So where can it go from here?
I think you got to trim and trail it. This also, in the beginning of the year, kind of like 2 years ago with Google, you know, I talked about Google being my high beta tech stock of the year in the first quarter. It was a little flip-floppy, and everyone's like, "Oh, Red Dog, great job with your Google, nice media play." I'm like, it's a long year ahead of us. Within the first 2 weeks of January, I was already getting flack about Boeing, with the whole engine thing, and oh, Boeing, what a great pick, But P.S., it didn't go down. It didn't go down. Had all those problems. They threw everything, including the kitchen sink, at it. And then finally, when the news stops being so negative and one incremental piece of positive news, and it exploded. And the reason why I chose Boeing, again, because of chart patterns, not because, I'm a technician and I'm looking underneath the hood and I like their engines and whatever it is. Mm-hmm. It's because chart has been consolidating, new funds getting involved, and figured if the market was going to have a big move, they need some stocks that are megas like this. So anyway, you go here, and this was your channel in Boeing. Okay, very long channel, starting from almost last June, okay, going sideways. And then what happened? It started to show relative strength within this channel, all right? It's showing strength in the upper end of it. So once you clear a channel that's been in place for multi months, typically it goes. And then right here, this was your 78, and I think that's why I had it listed on the sheet as 78. Boom, to 84.85. You go back to the monthly chart, and the reason why I chose that was because here is a peak. Okay, coming into it, figured, at least if it were going to go, nice percentage move, could see close to, actually could see a little more, see closer to 90, but this is an area, this was clean. Now you take a little bit off and you stay with some. The historic high on Boeing is here, and I think at some point maybe it could even get there. But at this particular point, it's met a lot of objectives. A lot of people like to make a percentage return on something like this, over the course of a year. Well, you just had this move, which is the way this market has been moving in 2 weeks. So to buy new Boeing shares here, I would say just give it some time. But overall, still looks like it can go higher.
Now let's talk Facebook. You had some faith in Facebook back when you made your predictions. You were impressed by how it shook off its IPO issues and believed it would be able to solidify its business model, just like LinkedIn. Now, you predicted it would get back to the 32.35 range, and the stock closed at 27.08 yesterday. Do you still have faith in this guy?
I do. And there's been two different Facebooks over the course. It's almost been like a whole year of trading in Facebook. When we first came out with that, I was looking at even a more compressed cup and handle pattern, and I think it started during the year right here. Okay, this is when we started to really focus on it. Was right around here, around 24, when it was hovering right in front of this gap, which gave us a nice trade. In 2013, I was looking at this pattern, okay, which before the rest of this move, okay, which was right here. And then in the first few weeks of the of the trading, it went as high as almost 32. So it actually, in the first 2-3 weeks, it met the target overall. So right there, I did sell some. That was right around earnings. Also, they had that invite, if you remember, to the their function that they had as far as the search. So at that particular point, it was a really nice trade. And then I started to go back to it again right around here. Okay, I've lost a little bit, holding some, trying to stay with it. But now it's like almost a longer term cup and handle pattern. And at this point, it is acting a little faulty. I'll say right now, we have a long year ahead of us, and I still say this is not going to be the high of the year. But if you don't want to sit through it, you don't have to. I entered some shares right around here on this Red Dog reversal, which was the price I do believe was somewhere around 27. Came up to resistance. I was thinking it can get through and we can have a nice momentum trade. It failed at the 50-day. Yesterday was weaker. And now I'm just going to, I'm sitting in some of my stop right here now is 26.34. So if it breaks and closes below 26.34, I will be out of it and I will wait for some type of setup again to get in it later this year. Remember, we're not even at the end of the first quarter. Sometimes these things take a long time to develop. Like you mentioned with LinkedIn, I've been pounding the table on this stock for over a year, and at some points during that year, okay, it wasn't so clean, okay, and you could see at LinkedIn, okay.
You did DK,
Sorry.
KD.
It's a long morning already.
No, you did DK again, KD.
KD, jeez. Anyway, with that said, you look at how long this took. to get into fruition. Okay, this is when it came public. This is when this like little downtrend got broken. I remember right here, I also thought that it would take out the highs and continue to go. It had a nice rally before failing again. Then it came up and failed again, and then ultimately it took almost 2 years for this thing to finally have enough earnings reports underneath its belt that institutions felt comfortable enough for it to have this historic run to where it is right now. But overall, similar pattern. Big cup. Here is your handle with a bigger, broader channel. Here's when it started holding the upper end of it, acting better, because right here, everyone I think was phone calling me saying your LinkedIn is horrendous, but it did hold, and then boom. So anyway, it takes time, especially for macro situations, to work out. If you trade short-term Facebook right now, little wishy-washy. If you want to stay with it, be small. It starts acting better. That's when we'll get some more size.
All right, well, we're going to keep talking about Scott's 2013 predictions. We have to take a quick commercial break, and we'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going over Scott Redler's 2013 predictions, where we're at now and where opportunity lies. And in his predictions, he noted Apple's weakness at the time, and this is now late December. And so you said you'd feel much more confident about the market if Apple could return to its old self. And it obviously has not returned to its old self, but look at the market. So do you feel more confident now?
Well, I think the market did a great job ignoring the weakness in Apple towards the end of 2012. So I was saying if it continues to be weak, we have to watch that and monitor it. Let's see if it can continue. And during the process, in the beginning of the year, I still had anywhere between 5, 8, 12 longs, but it was hard for Apple to be one of them. So I felt like something was always missing. And I just tried to get also people to say, you still could be long other things, that money's rotating into other spots. And, I'm looking at the chart here, which you're not going to be able to see, but you could see on the predictions, is that there was like a short-term head and shoulders top in Apple. And I said, if it doesn't get any better, we could see a measured move down to 420. If you look at the chart here, this is what is on that sheet. Okay, you had the left shoulder. This was the big head. Here is the right shoulder. And we put in there 420. Okay, 420 being one of the measured moves, a bigger support. Okay, so it was one of those things that said, okay, if it doesn't get any better, this is where it can go. Not knowing it can get there, and not really even playing it to the short side to get there, but just noting it. And then PS, this is where we wound up being. Okay, the low here is now, what is this? 419. So with that said, what now? At this point, you still don't really know. You have to make Apple a little bit bigger. Okay, you want to go short term right now. It is holding this 419 to 425. You still have both of these downtrends in place. Well, it's funny because, Brittany, 2 days ago, I tried to be long a size in Apple. When it broke above, just say 435, and it had no follow through. Then yesterday, it couldn't break below 425. And today is the big Samsung meeting, Samsung event. Tonight, they're launching their new not iPhone, their new phone themselves. And I feel like every single person in the world is so damn negative on Apple today. Like, oh, you shouldn't be touching it because they like the Samsung phone. It's going to be sub 420, 360. Get out of the way. And I think too many people are saying that. So today might be the day that everyone is so upset. No one wants to be long Apple. That if we can get through 435 to 439 with power, it could actually start a move that people have been trying to catch, and now nobody really is ready for today. But we'll see. Well,
so is 360 then its next level of support?
That's macro support. You go back to the chart, one more time here. If it were to break this 420, okay, right here, you'll see it. Then you do have, probably a 380, then this is 360. But I think there is still a chance that it could break above this 440 and then perhaps retrace some of this move maybe back into the 468 area, or maybe even a little bit higher. That would be great. We'd love to have that as traders. But right now it seems as if it's day trading only until it proves that it's not.
Right, but there's still hope for Apple.
Small hope.
Clinging on to it.
Yes.
Let's turn to the ags. You set your target for Mosaic at 75 for this year, and we've seen a bit of wild action in this stock. It closed at 61.76 yesterday. So what would be constructive for higher prices moving forward?
The ags to me are always erratic, okay? And Jill, who's been on the morning call with me a lot, loves it fundamentally. She talked about it many times, and you've been able to time this a few times. And I think that chart-wise, it has been lagging still. There's been some opportunities, but I still think it's in the game to hit that target this year. You look at the chart. First of all, the ags have not been, the spot of relative strength. You look here, and you will see still, it's being held by, a pretty major resistance going across. Okay, here it is going into this area. Okay, the reason why I said 75 is because of this resistance coming into there. Figured, you have a low, a higher low, another higher low. If it could take out this area and the ags get some love, I do still think you can get to 70, 75. I think the next obstacle for Mosaic would be to get above 63, 61. It is higher, okay, so just say you bought it, coming into 2013, first things first, you had a decent move, and then technically short term, it just say it broke this trend line right here, and you could have gotten out if you were in too much, and then you have a little bit of a reversal coming back up pretty fast. And I would say let it hold short term above 60.40 for a while. Then at some particular point, if the ags want to get some love, once it takes out to 63 and change, then I think you'll have a clearer path for higher prices. Overall, you look at like even the MU in general, okay, it's been a weaker group, and perhaps maybe in the second quarter that changes, or maybe because the spring sometimes tends to be a good time for the ags anyway. But here's your inside range on that ag ETF. So for it to get above 55.20, I do think that would help the ags itself, and then also help Mosaic. And right now best in breed in that group, just to show you, is Monsanto, which couldn't break out yesterday, but I think if it could finally get some power, it could help the rest of the ags.
All right, well, a stock that Scott was cautious about for 2013 was IBM. You believed it was overpriced at its levels in late December, but it's had a nice run in February, and it finished in the green yesterday. So do you still think it's overpriced?
It's proven me wrong many times. I've taken small trades in this. Like actually last year, this quarter, I was riding along, and then I did think that it had a little bit too much exposure to Europe, a little bit too much exposure to the public sector, and I was just like, be cautious on it. Thank goodness I'm not shorted, or I haven't been shorting it. I just stayed away from it because I didn't really love it, and just there were other things that I understood a little bit better. But overall, IBM's been an unbelievable stock. For those, on a lot of different levels. This was that huge hole in the chart that wound up, controlling it for a while, which is the reason why I had somewhat of a bearish stance on it. But we mentioned, it's going to have to break below this 185 in order to, change this trend. And if you look here, it never did. So that's why it never triggered short for me. But I just also didn't buy it. Here was your earnings, and it filled that earnings gap pretty quickly. And then this, for some traders, they were talking about buying it right around here, right when it crossed above 203. I was not one of them. Then it just crossed above this pivot on the highs. If you're there and you love it, congratulations. I know Jill, we used to debate this because she loved it. She loved, she said, I love it short term, mid term, long term, just keep buying it. So hopefully the people that subscribe to her OP site are very happy because it's been a performer.
Right. Well, anyone who's listened to you about Walmart should be happy too. This was, of course, Scott's retail stock pick of 2012, which exceeded his expectations and continues to look good.
Yeah, this one also, the decade of pain. Anytime you see something holding higher for a decade, absorbing huge moves, you know that it's just taking time to get in safe hands, especially a mega cap like Walmart. So 2 years ago, Walmart was a stock, and it wound up triggering, met the targets, and still right now I'm long Walmart, and it's looking like it could continue after last year's move. This was the huge decade-long consolidation that we talked about, which is why I went on the radar. Okay, I was on Sullivan's show, Street Science, talking about it right around here. And then here's where it triggered above 64, went to above the target of 75, pulled in a little bit, still holding in well, starting to get back in motion again. I think that this in the cards, this thing could see last year's highs and then above. So this still looks good. I still like Walmart. Last year was a really nice mover, and now on the daily chart, it's starting to act better. It cleared the 72, which we talked about and off the charts. Then it touched the 8-day, bounced off it pretty well, and now if it could start getting above 74.20, perhaps it'll make a move back to the highs, but overall something good for investors to own, and you could actually have timed Walmart, believe it or not.
Right, and how could investors have timed Google? Because Google was, of course, Scott's tech stock pick for 2012. His first target was 750, went as high as 70.75, and this year it is a current high of 844.
Well, this one, I put on the calendar last year, and that's when it missed earnings like twice. But it never really failed, and that's when people were giving me grief, saying, oh, you said Google. I'm like, well, listen, it's a long year. What's your time frame? Are you a macro investor? Are you just holding it, or are you looking for better spots to trade it? And for 4 or 5 years, it was in this base where it was not making a historic high. And remember, when it made its high, it was just search. And then now it's got like 5 other viable businesses, which I'm not going to get into. But overall, technically, this was the level that I was watching right here. I was watching this 640. I think this is when it failed a little bit in the beginning of the year, came in, then finally took it out. Okay, with authority. Went back last year, eclipsed the old high, which was the target, and then you had a pullback retest, and now you go to the daily chart. If you trade it a little differently, like if you trade it sort of like I do on intermediate time frames, all right, here is, if you didn't take it into earnings, here is the gap up to start, which changed the complexion this year above the 8-day. Then it held tight, and then from here it took out last year's 52-week high of 774. And then from there, it's been a methodical move all the way to where it is now. And I would say right now, it's in one of those spots where, I would be light and see if it could continue the momentum. It's been getting $1,000 price targets like like they grow on trees, and that's always a bit of a sign. But, I do think that the Google glasses, all the things, the initiatives that they're doing, they're really hitting on all strides, so to speak. Above, I would say 831 and a close above it could set it back in motion. I'm not long Google, but I'm looking to see if there's an opportunity the next few sessions. And I really think what they should do is, if they're smart, they split the stock on the next earnings like 5 for 1, and then it'll be 1,000 in a blink, versus trying to be egomaniacs, say, hey, look at our stock at 900, 950, where meanwhile then it becomes a blimp, then everyone starts questioning the valuation, and no one looks at the PE anymore, or they look at his price, and that's what happened with Apple. If Apple would have split their stock, chances are it would not have got hit the way it got hit.
Right. Well, regardless, people keep saying out there that this can't last, this market, this rally, when is it going to be over? But the market just doesn't seem to want to quit. So being as we are where we are now, what do we do, being as it's hard to expect the same results next quarter?
I think now you just go into more of a neutral. If you were in third, fourth gear during this first quarter, then maybe go back into second gear or first gear and say, okay, you know what? We just had a 9-10% move in a lot of the indices. I think the S&P and the Dow. We're not going to have 9% next quarter. Okay, I'll say that. Actually, I can't say that because who really knows? But I would say just, do less and stay with the composure. We had that one little setback a few weeks ago with the Italian elections, and, I got the cash. I said, okay, I'm going to book a lot of my trades, go right back to the chart of just say the S&P right here. But you also had time to get back in, okay? I was looking at this ascending channel, okay, following the 8-day. We broke below the 8-day, got out of a little stocks. On this day, I think I got short. But then what happened? Okay, we had a little reversal. There wasn't follow through to the downside. Snapped back real quick. And then within this 3-4 day time period, I went back into portfolio approach, maybe had, instead of 10, 12, 15 like I had here, I went back to 6 to 7 positions to get back with the rally. And then once it crossed above 1530, you knew emotion was back in play. So there might be another time when it happens again, and then you'll just have to measure it and figure it out and keep trading around your positions with hedges and use a tier system, watch chart patterns, watch the money, and there's a lot of ways to skin a cat and approach it.
All right, well, happy trading, everyone. Have a great day.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.